Uche Orji, CEO of the Nigerian Sovereign Investment Authority. Nice to see you here.
Nice to see you too. Thank you.
And we are at an Africa Investor Summit here at the Nasdaq market site. You run the Sovereign Wealth Fund. You were telling me before we started that 60% of your investments are actually international right now.
That is correct.
Tell me why you're looking outside of Nigeria, because we know many people are looking in Africa for potentially outsized returns.
Well, yeah, but that's also 40%, which is in Nigeria. So let's get that balance right. I think the first thing you need to understand is these funds were set up also as a hedge to the local economy. So you can't have 100% of your allocation domestically because then it's difficult to stabilize the economy if anything goes wrong. So you need to get the balance right. There are three funds that make up the Nigeria Sovereign Wealth Fund. The first fund is a stabilization fund. That is a fund that you're supposed to provide use for stabilization support in times of economic stress. The second fund is a future generations fund. That is a fund that's supposed to provide savings for future generation of Nigerians. And the third fund is a Nigeria Infrastructure Fund. Now, what the law says is that we need to allocate 20% to each of these three funds, and then the remaining 40% is at the discretion of the management and the board. So what we did was 20% was in Stabilization Fund, 40% is in Future Generations Fund, and then 40% is in the Nigeria Infrastructure Fund. So that's how it's been set up. But I also think that allocation may be a little bit misleading in the sense that one of the strategies of the Nigeria Infrastructure Fund is to create co-investment vehicles to attract external capital. And to that extent, recently we launched a real estate co-investment vehicle targeted at $500 million with a maximum of $100 million commitment from the Nigeria Sovereign Wealth Fund. We also launched a $200 million agriculture infrastructure investment fund with $25 million commitment from Sovereign Wealth Fund. So we've got other people investing in the country through vehicles set up at Nigeria Sovereign Wealth Fund. So ultimately, if you think about the entire assets under administration or under management, a larger portion through these co-investment vehicles will be in Nigeria than internationally.
What is the biggest growth story in Nigeria right now? We know that oil is important. We know the rise of the middle class is important as well.
Yes. There are so many stories there's so many aspects of the economy. The areas I see opportunity and areas where I see growth and investment opportunities are, number one, obviously in agriculture. It's the biggest portion of the GDP. Needs significant investment. And one of the funds we've set up is aimed at partially addressing that. And this is an area where it can both be impactful domestically, but also earn significant returns for the external market. The other area of focus for us is actually in power. So as you know, with electricity, there's a lot that's been done in Nigeria to make it investable. And recently we're seeing a lot of effort in renewables. We're also seeing some programs in gas to power, on all the forms of alternative energy. So that is an area where I think that a lot of the structural makeup of it is beginning to attract investments, and I think that's going to unlock so many areas. Industrialization and other parts of the country, in my opinion, will then pick up on the back of that. The third thing that I see as going to be really, really important is having a way of organizing our manufacturing. There's a significant gap in the manufacturing sector, and I expect that to see a lot of opportunity. And I see this. I see this in our infrastructure. Our real estate fund, for example, is invested in logistics. And I think that's enabling the industrial market in Nigeria. So that's another area where I think there's a lot of opportunity. So oil, yes, it's interesting. And I think to a large extent, it's the biggest revenue component for the government. But it's 15% of GDP or less. And so I think there's other areas of the economy, agriculture, real estate, industry, that I think are quite important and should attract investment.
What are you seeing in terms of outside investment in Nigeria, in terms of growth of foreign investment?
Sure. I think it's a bit of a mixed bag. I think most people who invest in Africa, unfortunately, are momentum investors. So they come when it's all seems to be in a positive momentum. At the moment, obviously, with the economies experiencing a bit of a significant drag from the commodity down cycle, you're seeing less and less interest. But we're also seeing more credible investors who understand the simple concept of buying low and selling high coming back into the country. And that's what you're seeing with what we're seeing with our recent big investment fund we created with Old Mutual. The reality is this is an incredible buying opportunity. And I say this as somebody who had been an analyst on the street covering semiconductors, which is one of the most deeply cyclical sectors you can ever imagine. The truth is, when people buy and make money in these sectors is when the macro looks very, very challenged, if you have the courage. Today, and I say this as somebody who's probably on record as having, a year ago, 2 years ago, said, look, commodity asset prices were a little too high in Nigeria. We didn't do much domestically. Now that we think things have come in, we're actually becoming very aggressive. And so we're actually practicing what we're saying. So we're not just saying it because it sounds interesting to say it, it's what we did. So for most of the last 3 years, we didn't do much domestically. But now we are actually aggressively committing a lot because the prices are right, and I think the opportunities are quite interesting. So part of what we've done through this co-investment funds we've created is to create a platform for people to safely co-invest with us into the economy. And I think that's starting to work, given the response we've seen so far.
Well, it's been very nice chatting with you here. I want to thank you for your time.
My pleasure. Thank you so much.
Thanks.